Hello traders, I'm Ruslan Popov, the author of Forex Strategy Builder Professional. In that video, I'll explain you how the closing point of the position slot work. The closing point of the position slot is that one here. It is mandatory. We cannot remove it. There is no close button. It is below the opening logic conditions and above the closing logic conditions. It is only one slot, and we set here a price where we are closing the positions. For example, what we have at the moment, we have a rule for long position: enter long at the bar opening when AC rises, and close the long position at bar closing. Bar closing determines only one price. This is the last price for the bar, close price. So it is same for the short position. And for the short position, our rule will sound like enter short at bar opening when AC falls at bar closing. We can easily see that on the chart. Like that. Here we're entering long and exit long at the end of the bar, at bar closing. And for short position is same. Enter short at the beginning of the bar and exit short at the end of the bar. We can always see how the conditions work in strategy overview. This logic section is divided in several parts. Here is the closing section. We have close an existing long position at the end of the bar, close an existing short position at the end of the bar. This is because we have the same price, one and the same price for exiting long and short. But some indicators has different prices for long and for short. Such example is Bollinger Band. Let's set the Bollinger Band here. There is also another band indicators: Donchian channel, envelopes, high and low, fractals. These are all indicators that sets two prices. And in such cases we have two exit prices. We always set the prices for long position. We have exit long at the upper band, or we can choose exit long at the lower band. Let's be upper band. Every time when we have a long position, we will close the long position at the upper band, and when we have a short position, we will exit the short position and at the lower band. Let's make something more complicated. I will set here Bollinger Bands. Enter long at the upper band and exit long at the lower band. This is a classical trend following system and application of Bollinger Bands. I will reduce here the entry amount. Fortunately, that system is not working very well, and this is the purpose of Forex Strategy Builder, to show us the backtest, how these systems that we are learning from the books, that we are reading in the books, how they work. But what we have here, we have the rules: enter long at the upper band and exit long at the lower band. For short position we have enter short at the lower band, because the rule is opposite. Actually, we see that the short entry rule is the same as the long exit rule. And what would happen when we have long position? When the market touches the upper band, we'll enter long, and we'll keep that position until the market touches the lower band. But when the market touches the lower band, our strategy will close the long position according to that rule, and at the same time the rule for entering short will be satisfied. So the strategy will open short position, and actually the strategy will reverse the position. How that is shown in the chart. Here we have good trend. We have short position. The market rises. Here we're losing, but when the market touches the upper band, the strategy closes the short position and opens long, and it keeps the long position until the market reverses and touches the lower band. It will close the long position here. We have that profit, and it will open at the same price short position. So our strategy will be reversal. We have long position, short position, long position, and so on. We can do that in different way, because we have one indicator that doesn't represent price. This is quotient reverse indicator. We see that nothing changed from the previous strategy, from that one, and quotient reverse, because quotient reverse tells the strategy that it don't have exit price, but instead of exit price, the strategy must use the entry rules. So when the entry rules is satisfied for long position, the strategy will open long, and when the rules is satisfied for short position, the strategy will close the existing position and will open a new one in the opposite direction. And that looks in the same way in the chart. When we are short here at the lower band, and when the price touches the upper band, we are opening long. We are reversing our position. Also in the next touch of the lower band, the strategy closes the long position and opens a short one. This indicator is exception. Most of all other indicators determines exit price. We have here one nano indicator. This is a custom indicator. It is designed to prevent signals. This is also exception. Actually, that indicator prevents the exit signals, no exit. And the strategy is controlled only by entry rules. This indicator is useful when you want to test only the entry rules. Let's see the parabolic SAR indicators. Let's what we have. I'll set here moving average and momentum. Moving average and momentum for entry. Okay, let's be only moving average. Here, this parabolic SAR indicator is also exception, because this indicator is set at the closing point of the position slot, and it determines the exit price, but it also determines the trading direction. If you see on the chart, the parabolic SAR is plotted with dots like that, and this is something like a trading stop. It moves the stop closer to the market when the market is in our favor. For example, we have here, no, we don't have position here. Okay, we have here long position. We're entering long here because the entry price is above the parabolic SAR. When the market moves up, the closing price moves up also. And when the market touches that exit price, the strategy closes the position, and at the same time parabolic SAR jumps over the market in the other side, and it allows only short entries in that case here, because the market is below the parabolic SAR. So we enter here short at moving average, and we're closing at parabolic SAR here. What is the specific? That parabolic SAR determines the exit price, but also it determines the trading direction. Let's see another example. I will set here simple strategy. I use Bollinger Bands, and I want to enter at the upper band. Where is the Bollinger Bands? Enter at the upper band, and I want to close positions at the middle band, at the moving average. You know that Bollinger Bands is a moving average. In that case, we have a simple moving average with period of 20, below and above the moving average. And I want to close the position at that middle line. So I'll set here moving average, and I'll set period of 20. This moving average is exactly over the middle line of Bollinger Bands. And we have, for example, here we have short entry at the lower band, and our exit is at the middle line, at the moving average. But we do not open here position, we will open at the upper band according to the entry rules. Enter long at the upper band. So for a summary for the closing point of the position, we set here exit price, for example bar closing. This is the price at what we close positions. This for that indicator determines only one exit price, and we are closing here short and long positions. But some indicators can determine two prices for exit long and for exit short. And here we set the rule for exiting the long position, and the program determines the mirrored logic for the short positions. Close and reverse indicator is exception because it forces the strategy to use only entry rules, and when the opposite rules is satisfied, the strategy closes the previous position and opens another one. It reverses the position. And we saw the parabolic SAR indicator that also determines the entry direction. Let's say something about the closing indicator. This is also specific indicator. The closing indicator determines that the exit price must be at the end of the day, at the end of the last bar of the day. When you're on the daily chart, when the bar closes, we're closing our position. Let's make something that trades at every bar. I'll put here, let's be bar opening, and I'll set something to determine the direction. Let's be moving average rises. Yes, moving average of period of 14, moving average rises. So our moving average will determine the trend. Okay, what we have? So we open at bar opening. When moving average rises, we open long, and we will close our position at the end of the day. But because we are on the daily chart, the strategy will close the position at every bar. If we select lower time frame, for example H1, we'll have exits at the last hour for the day. What here? This is 23. We see that here opening time. This is the opening time of the bar, 23 o'clock, where we close, because the next bar is 00. This is the next day. So we're closing at the end of the last bar of the day. Here we're closing at 20:00 because it is Friday and the market closed here. What is important? This is only for the backtest. If you are trading that system on the market, that indicator day closing is designed to close at 24:00. For the backtest, it's easy. The backtester sees that the day is changing and it closes in the previous bar. But when you are trading on live, that strategy may not be able to close on Friday, because on Friday the market closes on different hour, and we have to use day closing 2 indicator. For that indicator, we can determine the specific hour for closing. For example, we can specify here the closing the time for the day, for every day, I have here 23 and 59 minutes, and we can specify a closing hour for Friday. It depends on what time the market closes for our time zone. These times are always according to the server time, according to the broker. These are not local times. We have to check your broker at what time closes on Friday, and to set here the closing hour. It is the same for week closing. We have indicator week closing. This indicator closes the position at the end of the week, at Friday evening, at the last bar. Here we have 6th of March 2000. Okay, here we see the date and time, and here is Friday, 8th of March. Here with that indicator we have the same problem, because it works well for backtesting, but for trading we have to use this week closing too. It's not problem to backtest the strategy with week closing 2 indicators. It will work in the same way in the backtester, but it is useful for the trader because we can specify here exit time according to the time zone of the broker, according to the data. I'll end that video. Thank you for watching. If you like these videos, please rate the videos and subscribe to our channel. Bye bye.